Hello everyone. Welcome to Intellect Global Consumer Banking and Central Banking Divisions webinar on the new wave of progressive transformation for central banks in Africa. I once again thank you all for joining. In today's webinar, we have three speakers. In fact, Mr. Ganesh Kumar, former Executive Director from Reserve Bank of India. Mr. Ganesh Kumar is a highly experienced and accomplished central banking executive. He joined the Reserve Bank of India in 1984 and spent over 3 decades in various leadership positions and departments, spearheading the central bank's technological transformation, including the setting up the core banking system and first state-of-the-art data center for RBI. In addition, he has been part of many international, committees under BIS. With that note, my name is Selva. I'm heading the business globally for central banking and enterprise solution consulting for Intellect. I'm in the industry for nearly 3 decades, been part of many large-scale digital transformation for central banks and commercial banks. My expertise goes deep into the domain, technology, architecture, and the enterprise solution consulting. With me, I also have Mr. Vishal Singh. He is heading the region, with 3 decades of experience. Probably at some point in time, he will be spearheading the conversations going forward. With that note, let's move on. In fact, a quick brief about who we are. As Intellect, we are a global financial technology company, been supporting the large-scale transformation of central banks and commercial banks for over 3 decades now, with the support of over 6,000 people, of which 1,000 of them are focusing on cutting-edge technology and functional R&D work, including the Gen AI, blockchain, CBDCs, and so on and forth. As of today, we are supporting over 300 commercial banks with operations in over 90 countries. And design philosophy is at the core of what we talk about as we walk through the day. I'm sure you are going to feel it. As of today, Intellect is world's only next-gen composable and contextual financial technology company, bringing together the business technology and operations through over 1,700 REST APIs, industry-aligned APIs, and over 350 microservices and over 200 business components, cutting across the banking spectrum from central bank to consumer banking to corporate banking to transactional banking to institutional banking. With that quick note, we strongly believe in central bank transformation. Before I give it to Mr. Ganesh Kumar. In fact, we are largely present in sub-Saharan countries, in over 25 and odd countries across Africa, from south to west to east to north. So before I hand it over to Mr. Ganesh Kumar, brief about central banks. Central banks in sub-Saharan Africa have undergone a transformation journey over the past 6 decades, evolving from rigid fixed exchange rate regimens to more flexible and discretionary monetary policies. Key developments include shifting towards flexible exchange rate systems and reducing dependence on central bank financing of fiscal deficits in the 1990s, modernizing and liberalizing banking systems, introducing market-based interest rates, and establishing independent regulatory agencies, participating in regional integration initiatives to harmonize financial regimens, regulations, and promote cross-border banking supervisions. As banks prepare to move into new world order, I invite Mr. Ganesh Kumar to take us through key progressive transformation strategies which central banks like yours can consider. Over to you, Mr. Ganesh.
Okay, thanks a lot, Selva. I hope I'm audible and my
Yes.
presentation is right. Thank you very much. Welcome to this. I'm going to zoom now and say invigorative, entertaining, and gripping presentation that we are going to make for all of you. But before I start off on that, a little bit of good news and bad news. Whenever I have a physical presentation and I'm able to actually be with all of you, I can actually see the vibe. So I actually have it in the form of an interactive session. Thanks to the COVID, thanks to the technology, which makes us actually talk to one another, although we are thousands of miles apart. There is a little bit of the lack of the personal touch. We will try to make it as we go along, so don't bother much about that. But the bad news, which I thought I will talk to you about, is that in fact I thought a little bit when Selva asked me to go ahead with this so-called presentation that I am to make. Do I need to make a PowerPoint presentation or do I need to talk? The biggest challenge in actually having a virtual session is that since we don't have eyeball contact, one doesn't know whether all the computers in the room are at the same synchronous level. So to ensure that that synchronization happens, I thought, let me go to the PowerPoint presentation plan itself. And Soumya here will actually, she's actually volunteered to help me in the presentation. So that's one thing about the presentation. But before we go to the presentation, the bad news which I wanted to tell is that I've got as many slides, as many minutes that I have. But the good news is that I will not go through all those slides. Don't worry much about it. Most of those slides are actually having points or inputs which all of you as expert central bankers are aware of. My job here is only to try to share some of my perspectives, some of my experiences, some of the learnings that we have had at the Reserve Bank of India. And how do we, the objective is, I will try to share this so that how do we try to together try to learn from these and then have a better, more effective, and as I always say, smarter central banking that we would like to look at. So that's what I thought I will do in the next 20-25 minutes. The other set of bad news, good news, which I normally say, is that this bad news is that I will tend to talk more, maybe nonstop for the 20 minutes. But if you feel at any point in time that there are certain points that you need to ask, just jot them down or through the chat box, just send across the questions. We will have a Q&A, which will be actually taken care of towards the end. And the good news is, in fact, we would want you to ask questions, because unless you ask questions, you won't get clarity. And unless you challenge us with questions, we would also not know exactly the level of the plane that we are all in. Now, with this, let me go straight into the presentation. Soumya, you could just start. And as the presentation is getting uploaded, I was actually thinking to say, why should I be the person who talk about this? And I thought what I need to do is that, see, very similar to where all of you are, I was also in a similar plane not very far ago. And the way I thought I would do it is, and very long ago or far ago, was just about a decade ago. In fact, the Reserve Bank of India, to which I was attached for a pretty long period of time, is actually very similar to most of your central banks or the people who are present here representing the central banks. We are all full service central banks, unlike some of the monetary authorities, like say, for example, in Singapore or Hong Kong, where they are pure monetary authorities. We are full service central banks. When we are full service central banks, like Selva was actually mentioning, we have got multiple hats to play. And I'm sure that most of you who are present here have actually tried your hands at multiple roles up till now and have a long career ahead where you're going to do multiple other role playings as well. So we've been monetary policy experts, we've been accountants to the bank, we have been regulators, we have been supervisors, we have also been foreign exchange managers. In fact, I would say, other than perhaps geology and archaeology, maybe all other things under the sun are what we as central bankers are expected to do. And the challenge for all of us is, in today's world, one, we cannot do without technology. And I'm sure all of you, most of the time, are glued to your smartphone or a smart tablet or your smart system, which you have, in addition to the smart people that you are all there. And the second one is, on these smart systems that we have, we expect that there are smart softwares which work, and that is where companies like Intellect actually try to provide some solutions which will help us in our day-to-day operations. So that's the second one. And the third one is that the expectation from central bank is that we should be ahead of the curve, we should be ahead of the times, and we should come with solutions even before the problems arise. Now, that's a very difficult thing. And one of the important things for that is to have a lot of data. Decisions today in the new world of central banking are all based on data. So this is the agenda that I thought I will do. Most of it is what all of you have been experiencing at various points in time. So I'm not going to go at this stage into detail into it. I'm sure most of you must have seen into it. So I will go ahead with the agenda. As central bankers, we talk a little bit about the global macroeconomic environment. No discussion on central banking is complete unless we talk about the economic environment, the macroeconomic environment, and what is the characteristic of the macroeconomic environment. Gone are the days, which, like Selva was telling, till the 1990s, or I would say till the turn of the new millennium, where we could function in our own independent cocoon and not be worried much about what's happening elsewhere. Today, we are in a scenario where anything that happens anywhere else in the world certainly has an impact on us. So if there is a Ukraine war, well, we are all worried whether our SWIFT systems will work, whether the messaging platforms will work. Although the war is between Ukraine and Russia, we are thousands of miles away, but still there are impacts or potential impacts that will be there. And I'm sure that if something like this happens, our governor or deputy governor is going to send a small note or a check saying that, can you give a status update on what is going to be the impact? So that's one thing that we are there. So the world of today is very volatile. That's the VUCA that I've written. All of you know about it. It's very, very volatile, uncertain, complex, and ambiguous. And more so because we are central banks, because we are supposed to lead the economy of our respective countries. And if we make a wrong move, or if there is a wrong response or reaction, then the impact of that could be a snowballing or a contagion effect, which we can ill afford. So that's what it is in today's world. The biggest challenges there are relating to inflation management. And today, if you look at it the world over, thanks to whatever the COVID pandemic brought in, there is, and again, on this, there is no unified opinion, but there is a view that there are many countries which are slipping slowly. I'm not calling it into recession, but at least into a level of slightly reduced growth compared to what they were before the COVID phase. So that brings in a lot more pressure on us. And if in a globalized environment, well, all central banks are interrelated to one another, how do we take care of ensuring that the macroeconomic aspects which we are supposed to take care are also gelling with what the rest of the world had to do it? This brings us the need to have technological tools, data-based information, and high intellectual capability of all of us here to take the right decisions at the right time. So that's what it is. And how do we do this? We do this simply by virtue of our balance sheet. At the end of whatever is the expectation from the central bank, it all boils down to the balance sheet. It's the total assets and liabilities that we have, which decides how effective can be. And on a lighter note, most of you are very young people here. I'm possibly pretty old here, but I still recall the day in 2008. I was at that point in time having a dual role of having to manage the technology of the RBI and also to manage the foreign exchange reserves. And like many other central banks, like most of you, we have investments spread across the countries. Foreign exchange assets are spread across multiple countries in the world. And many of the financial asset managers used to come to us and try to market that their product or their country should be the best for investment. I still remember the day in 2008 when there was a team from a big company. I'm not telling the name of the company now because you will certainly come to know about it. They had come to make a presentation, and in the presentation, it was a usual presentation saying what type of investment should you have, how should you take care of risk management, what is the type of returns that you should expect and all that. Typically what all central bankers know, and I'm sure all of you know. They ended the presentation by saying that it looks like you people who are managing the foreign exchange reserves of the Reserve Bank of India need to know a lesson or two on how to manage foreign exchange reserves. Now, Reserve Bank of India at that point in time had completed around 75 years of existence. Now, here is a company, a private company, which is coming to the Reserve Bank and saying that, look, you need to learn about this. We said, okay, fine. Tomorrow we will have a meeting where you try to teach us how we have to actually do foreign exchange reserve management. The next day, unfortunately or fortunately, there was something which actually shook the entire world, and that was the economic collapse which happened on account of the housing bubble burst in the US, the impact of which had ripple effects throughout the entire world. In India, we could thankfully scrape because we did not have capital account convertibility. And since we did not have capital account convertibility, the impact of that did not translate into India. We were fairly insulated. We will discuss about capital account versus current account convertibility for a later session. But the point is, this company, and now I hope you will know the name of the company, was the one which actually triggered off the collapse. I can now tell you the name. That's Lehman Brothers. They were the ones who actually came and said. So the point is, in this uncertain world, you do not know where a particular company is there today, where will it be tomorrow? And as central banks, we cannot afford to have that. We need to be present, we need to be omnipresent, we need to be omnipotent, meaning that everybody in the country looks up to the central banks, if not for anything else, for the currency issue that you do. They also look to us for economic stability, and all this goes based on data. And if the data has to be there, it depends on our balance sheet. And if the balance sheet has to be managed properly, we need a system which takes care of the balance sheets. And that is where the technological role comes in. That's where, again, Intellect did help us in Reserve Bank of India. But before you get me wrong, I am not doing any marketing for Intellect or trying to say that the Intellect's product is better or not. But then I'm trying to give the position as it is for Reserve Bank of India with Intellect's products. At the end of it, you will find how it's been a journey of togetherness, is what we thought. And that is what is about the global macroeconomic environment. We will now move over to the next one, which is, see, I'm now backtracking to the turn of this particular decade of the 21st century, the period around 2009-10. Yes, after the economic collapse that happened, the Reserve Bank decided that, well, we need to now do something which is a substantial change. Because one of the challenges that we were facing in the late 2000s and early 2010 onwards was that we were having multiple IT systems, multiple softwares, and multiple databases. So if I were to find out how the assets of Reserve Bank of India have been deployed world over, I had a treasury solution. If I were to find out how my banks, the banks which RBI regulates, though they have to keep, unlike in most of the other countries, they have to keep certain statutory amounts of money with the Reserve Bank. They are called the statutory ratios in the form of cash reserve ratio, statutory liquidity ratio, to ensure that the banking system is stable and that it doesn't collapse. So how do they keep the money? How do I monitor this? So we had another system for that. We had another third system, which was actually managing the entire inflow and outflow of foreign exchange into the country. So if I were to, at the end of it, the balance sheet of Reserve Bank of India had all this, in addition to one of the most important functions, which is the currency management, the local currency management. As you would be aware, Indian currency is the Indian rupee. So that's another thing that we have to take care. So all this constitute part of the balance sheet of the RBI. But there were multiple IT systems. Each system was spewing out its own data. And at the end of the day, or at the end of the month, or end of the half year or financial year, when as the accountant of Reserve Bank, I had to generate the balance sheet, literally I had to tear my hair off because there was no one system from where I could press a button and get the balance sheet. I had to get data from system A, system B, system C, try to merge them. There will be differences in that. There will be atomicity issues. Some system will work faster than the other. So it used to be hell. So that is when Reserve Bank decided, well, instead of looking at mechanization, which was the approach till now, we need to look at automation. We need to look at what typically today everybody talks about is what is business process reengineering. I don't want to convert an activity which was being done manually or partly manually and partly using IT systems into a computerized system, but I want to do it in a manner where this IT system takes care of most of the mundane activity where there is no intelligence required. And the human being only takes care of intelligence. So point is, we needed a holistic system which, about all the systems that I spoke about, how do they all sit together? How do they interact with one another? How do they interact with the speed, with the throughput that it is necessary? And how do they interact and give output to the way the RBI or any other central bank wants? And like any other central banker, I remember my governor those days, every day he will come and ask new requirements. Today he will say, tell me what is the outstanding amount which banks have taken as liquidity support from us during the last, let's say, 15 days. Tomorrow he will say, I'm not interested in that 15 days. You have to tell me during the day, intraday, how is liquidity movement taking place? The next day, he will come and say, look, I need to know what is happening as far as the Forex reserve rates are concerned. So every day it was different. And typically, most IT systems will have reports. These are predefined report formats, the way we have designed them when we gave the specifications to our IT vendor. But the challenge is we needed reports on the fly. We needed reports which needed to be provided to our top executives, and most of them, you know better than I, the requirement of the top executive is to say, I want the report yesterday. He would have come and told me today, but he says he wants a report yesterday. There is precious little time available. So how do we take care of that? We take care of that, and that's the approach on the right-hand side of the presentation, where we thought we need to have a modular system. Modular meaning new modules can be just plugged in and play. It's like, let's take the case of, just for example's sake, an airport in the African subcontinent. Let's say the airport in South Africa or Namibia or Zambia or Zimbabwe, wherever it is. The airport is an airport which takes care of only providing a runway, provides facilities for people to board and deboard, and maybe have some shops and other facilities for the passengers. But the most important thing is whether it is a Boeing flight, an Airbus flight, an Airbus A380, which is a long one with a double decker, or a small helicopter which comes in, the airport works as the platform. On the platform, multiple types of aeroplanes or other types of flight vehicles have to land and take off. So we thought that the system which a bank or a central bank needs, pretty much similar to the commercial banks, needs to be modular and scalable. So what are the large transformations that we need to do? Getting the IT system is easy. Once we tell the vendor, these are our specifications, any vendor will provide for it. There will be some gaps in understanding, but by and large, they will do it. But what is it that is required from the RBI side? What is it that you also have to do? The most important thing is change management, and we learned it the hard way. The first thing is the attitude of the people who work on the systems. When I say people, these are the operators, these are the managers, these are the software vendors, and these are my top management, like the governor, deputy governor. Everybody needs to change an attitude. The attitude of the governor is, he says, you have got an IT system, press a button and you will get whatever you want. Doesn't happen that way. The IT vendor will say, unless you have specifically told me what you want, I have not designed my system that way. My data entry operator or my person who's actually keying in the data will say, I do not know anything. You have only given me this data in a particular template. I can only do it that way. And my manager will say, well, I do not know how to monitor this, or I do not know how to change it, or there is a system outage, or there is a breakdown in the database, or the database is overflowing. Those of you who have got technology bents of mind will say, my data center has got a problem, throughput rate is less. There could be multiple problems which come in. So the biggest challenge is, how do you manage all this change? So the biggest way to manage the change is a typical executive's prayer, which says that accept whatever is not possible and change whatever is possible. This is the mantra to success, and I will talk about it. The last point I wanted to say is, when a new system is implemented, the vendor will be implementing with due diligence everything. But as users, we need to see that the system accepts or meets our requirements, which is where the second last bullet point, keep testing the system, retest the system, more test, and test. That should be the mantra till the system goes live and even after it goes live. So this is a big challenge that we need to overcome. Those who overcome this, I would say 80% of your challenges are taken care of. The next item is the complexity in the case of RBI. I'm just giving this for you to understand. Unlike in some of the other central banks, in the case of Reserve Bank of India, India is a large geographic country. We've got a federated structure where there is a central government and where there are regional states, pretty much similar to some parts of Europe, America, and some parts of Africa as well. So there is a central bank. The central bank has got a central office, which is in the financial capital of the country, which is Mumbai. And we have got 31 other regional offices, each taking care of a particular state. So at any point in time, I need to know not only my funds position at every regional location, but also for the Reserve Bank as a whole. And I need to also know it state-wise, because each state is a federated structure, and also central government-wise. These are big challenges. So accounting for the government, because ultimately the Reserve Bank or the central bank of the country is the accountant to the government as well. That's a big, big challenge that has to be taken care of. And among all this is, like I said earlier, monetary management is something that we have to take care. take a call to the governor to say whether inflation should reduce, whether inflation should increase, if it should increase, how much basis points, or what should be the open market operations, etc. All these will have to be taken care of. And these on the left side are the various functions that the Reserve Bank of India was doing. And all of them required IT systems to take care. Whether it is a foreign exchange reserve management, today in India, we've got close to around $700 billion, which we keep. When the core banking system of RBI, which was incidentally developed and implemented by Intellect in 2010, that time our reserves was only around $300 billion. So the system should be scalable to take care of this large volumes, large processing in an almost real-time basis. And on the right side is all this data is used to regulate and supervise banks as well. We've got in India commercial banks, non-banking financial companies, payment system operators, and in addition, as the developmental bank of the country, we need to also provide for financial inclusion. We have got to provide for business correspondence. A lot of functions are what Reserve Bank does. So the IT system that is required needs to take care of all that. The only thing you will find here that this system doesn't have is perhaps my HR inventory system, the human resources inventory system, and perhaps my own salary or bill accounting system. All other things are part of this one integrated system. Why am I talking about this integrated system? The next slide will try to possibly give the example. Yeah, so what did the RBI try to do it? This was what we took as a decision to take almost a decade ago. We said we needed to bring better efficiency and scalability to all the banking functions of India as a whole. How do I do it? Basically, if you look at it, at the base of all the central bank functions is money. Whether it is money in terms of money management or monetary policy management, money in terms of currency issue, notes and coins, which are distributed, printed sometimes by central banks and distributed, or it is money which is distributed to banks and therefore regulation of banks is important, or it is payment systems, because in today's world, movement of money faster results in better factors of production. So to take care of all this, the common three was a 3E, which is efficiency in movement of funds, efficient services to our constituents, which is the government, banks, and other stakeholders, and efficient availability of information. Information for risk assessment, because in a volatile world, risk is something that we need to take care, and how do we take care of that? So the 3Es was the basic mission objective of the RBI more than a decade ago. Now, I've just tried to compare and contrast. In 2012, when the first module of the core banking system, you would have seen earlier, there was a name given e-Kuber. E is in electronic, it is digital. In fact, those days, anything that you add a word, the letter E and give, it will sell well. I was, in fact, sometimes wondering, the only thing that I didn't have was an e-soap, so that I don't need to go and have a bath. I just go to the shower and then say e-soap. I just say that, automatically the water will come in, automatically the soap will scrub my body, and then automatically a dryer will come, so that I spend 2 minutes and then walk out. I can continue doing my central bank business. That's, of course, future shock. We'll talk about that later. But the basic point is, when we started in 2012, we decided that we will take a phase-wise approach. All the operations cannot be done in one go. So the first operation was to take care of the deposits and the lending function of the Reserve Bank of India. What's the deposit? The deposits kept in by other commercial banks, kept by governments, kept by whoever has an account with the Reserve Bank, other deposits. What are the lending functions? Liquidity support, money is given to governments, money is given to other, RBI is also a lender of the last resort. So this was the first phase, where it was deposits and loans. Then move over to foreign exchange, then move over to treasury, then move over to an integrated balance sheet. Today, I can say, in fact, one of the requirements of the Reserve Bank of India under the RBI's Act, under which we are a statutory body, is that the Reserve Bank is expected to generate its balance sheet on a daily basis. Now, I know many of you will really find it very difficult to generate a balance sheet at the end of a financial year. Here, we are supposed to generate it at the end of every day. And the most important complicated thing is that the balance sheet comprises not only of Indian rupees, but also foreign exchange-based assets. And if I've invested in foreign US dollar, the amount kept in dollar needs to be converted into Indian rupees, and that conversion will have to be taken care of in my balance sheet. And typically, as you know, India and US are 10.5 hours away. So when I arrive at the balance sheet, US is still sleeping. So I don't even have an exchange rate. How do I do it? Again, an uncertain way of doing it. And the last one that we had to do is complete metamorphosis. substantial business process re-engineering. So what we did was two things. One, reduce, or if possible, do away with paper. Before 2011-12, every financial transaction was backed by a voucher, and a voucher was a paper. Today, there are no vouchers in the Reserve Bank. Everything is digital. It's there most of the case in other countries as well. The second, as far as possible, try to give access directly to your constituents. So if there is a banker who's maintaining an account, try to give banker access to operate on the account so that there is no need for data entry at the Reserve Bank. If there is no data entry at the Reserve Bank, there is no need to have that many people doing that work. And when people don't do the work, accuracy is better because the accuracy of the data is based on what is happening from the account holder's end. Garbage in, garbage out. And if it is good quality data in, it is good quality data out. As the RBI, you don't have to worry about data quality. And the third change that we wanted to do is that all this needs to be done on a real-time basis, meaning that if there is a transaction which is happening, it is now 1521. So at 1521, it will happen. 1522, the transaction of 1521 is already completed, archived, and that transaction is actually history. But the biggest challenge is not that. The biggest challenge was cybersecurity. By the time we implemented all these systems, from information security, the world moved over to cybersecurity. And there were hundreds of hackers in the world, hundreds of hackers in the dark web who always wanted only to attack central bank data, because they knew that if central bank data is hacked and taken into, it may not give them money, because most central bankers, as all of you are aware, we do not keep money in our systems, but then it will give them huge value in terms of information. If a hacker says, I have hacked into a central bank system, it gives them a huge lot of star points. And therefore, as central bankers, we have to take care of cybersecurity. That became the big challenge for us. How did we address it? We'll now look into it. The next slide, please. So, and the biggest other challenges, this I will just go through fast. Prior to the eCubear or the core banking system, these were, as I told you, the multiple standalone island-based system. Each function had an IT system and the dependencies, as you can see there. So here I've tried to just give a 4x3 table. So for 4x3 is, those of you who have got mathematics efficiency will know it is not 4 into 3, it is actually 4 factorial, which is 4 into 3 into 2 into 1, which means that many permutations and combinations of problems can come in. And that's something that nobody would like to work with. So that was the only purpose of showing this slide. And how we went to is also I will try to tell you. So how did we implement this? Very simple. It was a consultative approach. Business process reengineering I've already spoken about. It's a complete holistic approach that we took ahead. Yeah, so this was what those of you, again, you saw that 4x3 window. I have now tried to reduce it into a 2x2 window, which is on the left-hand top, you see what are all the data information which are required. And if you see some small bullet points, they are the various departments of the RBI. DBS means Department of Banking Supervision. DEIO is the Department of External Investment and Operations, which is the one which invests all the foreign exchange, etc. Don't worry much about it. On the right top is the banking and accounting, the green box. That green box is the one where the entire system of intellect is actually working and helping. But the other three white boxes also heavily depend on this data. So the left-hand top bottom motion is for internal management information systems, because based on this data, the governor of the Reserve Bank takes a decision about monetary policy. The deputy governor who takes care of supervision tries to say this should be the cash reserve ratio or the statutory liquidity ratio, etc. And the last right box is the external reporting. As I told you, the balance sheet of the Reserve Bank of India has to be generated on the daily basis, which means it has to be published on a daily basis. And it has to be compared with, let's say, the balance sheet of the Reserve Bank of South Africa or the Reserve Bank or the Bank of England or the Monetary Authority of Singapore. So we needed common standards, and common standards meant that we have to also comply with the accounting standards. Those of you who have heard about IFRS or International Financial Reporting Standards. So you needed an internal accounting standard, you need an external accounting standard. Our cup of happiness is not yet full. So this is what we wanted to do. And at the end of it, data can be asked for past period, so we needed a warehouse as well. So what was the thing that we wanted to do? Provide a bouquet of alternatives. So the delivery channels could be multiple. A large bank, India has the largest bank in the world in terms of number of branches. We have got a bank called State Bank of India. The number of branches is only 25,000. And we have got a small bank which has just got one bank branch. So a small bank may still come to the counter of the Reserve Bank of India to do a banking transaction. The largest bank may do all the transactions digitally itself. So to take care of all this, provide them with a bouquet of offerings. It could be counters, it could be through agents, or it could be directly digital, which is electronic internet. I have not put mobile here because typically as a central banker, we don't allow mobile transactions, but we allow mobile information dissemination. At the heart of all this is the core banking system, which I called it as eCubair, takes care of all deposits, the loans, cash, securities, etc. And all this is part of the enterprise general ledger for those of you who have the accounting bent of mind. We will now see, as I told you earlier, the most important thing is cybersecurity. The weakest link decides how strong our system is. So how do we take care of it? We take care of it not only by providing the security inputs, but also to see that our systems are compliant to international standards. What are the international standards? Those of you who are in the cybersecurity space will be aware of this standard called BS 7799. That's a British standard, which is now changed as ISO 27001. Our systems and the systems supplied by most vendors, including Intellect, are all compliant with this standard. When the vendor says that my system is compliant with that standard, you get relative peace of mind that my cybersecurity up to a particular level is taken care of by the vendor itself. Notwithstanding that, the system has to be subject to a lot of testing, and that's what is VAPT, or vulnerability assessment and penetration testing. This is something in addition to what we did in 2012 when the system was implemented. We do it regularly every once in 6 months. In addition to that, we have got something called a Securities Operations Center. Most of you must have seen it. It's something like a pilot's cabin, got a huge number of display screens. A person who's sitting in front of it, by seeing the screen, will know the health of a screen. He will know what's happening in a particular place. He'll know where there are vulnerabilities. He'll know where weaknesses are coming in. So if everything is green, it is great, but everything is not green. There could be some yellow, which are warning signals, but not to worry. And there will be a few reds, which will say something is going wrong. We need to take care. And that is where the cyber resilience strategy takes care. And whatever I told right now to you is only with reference to cyber security. We have such similar operations monitoring of the IT systems, of the data that is going in, because in today's world, all of you will be aware of what is called AML, or anti-money laundering. That's an important responsibility cast on central bankers. So that's another important thing. For every transaction which is cross-border or domestic needs to be also passed through the AML system. So all this, if it is available in one system, it makes life easy. Earlier it was not. So this is what we wanted to provide for. The next slide will actually talk about how did we do it. So most of whatever I've said here, I've already spoken in some form or the other, except the last bullet point where I spoke about, where it is written about the secure settlement of retail payments. Because by that time, we had also moved over from a check society. India was a predominantly cash society and a check society. We moved over to a digital payment society. Today, thankfully, we can say that we are probably one of the leading countries in the world where our retail payments, a substantial amount of them take place in a digital mode. It'll be of interest for you to note that on an average, we process, any gut guesstimate, 1 billion retail transactions in a digital mode every day. That's the volume of transactions. The values may be very small. It may be as small as 2 rupees, 3 rupees, or as large as possibly 100,000 or even 1 million rupees. So it goes on and on. So when the digital systems are going greater in size, you need to take a distinction as to whether all of them require liquidity support or can some of them be settled in batches. And that is where the settlement comes in. And when there are batch settlements, we have got deferred net settlement systems. In addition, we have got digital bill payment systems. That is what BBPS or Bharat Bill Payment System. We've got an immediate mobile payment system, IMPS, which will ensure transfer of funds from a mobile to the other, which is very helpful for retail payments. So all this at the base is the core banking system, or eCubair. These are some of those things that we have achieved. As we move on to the next slide, now this is something which is, I'll just put it for 10 seconds for you. This is the final eCubair core banking system. What is Kuber? I'm sure some of those of you who have got some insight into the Hindu school of religion, Kuber is actually the god of wealth. And since the entire RBI system has wealth in it, we named it as eCubair. That's the only thing. So these are all the things that are there. Don't worry much about it. This is for Selva and his team to actually provide to us. So we don't need to worry. We only need to say, get this, and they will do it for us. So what are the main highlights? The main highlights, technology-wise, it should be easy to use. So it should be a browser-based system. When I say browser-based, it's as simple as using a mobile phone, as simple as using, let's say, my iPad or my PC or my laptop. So that's how it should be. The entire data, especially the balance sheet, should be in a single general ledger. Most of the operation should work on a straight through processing manner, meaning that my transaction may originate from my foreign exchange department, it will hit my books of account, then it will go to my dealer, then it will go to a broker, then it will go to, let's say, Reuters or some a Bloomberg type of trading platform, get accounted for, and then hit, let's say, the foreign exchange platform. All this should happen in a straight through processing manner and at speeds which should be, let's say, 1 picosecond or 1 nanosecond, which is 1 by 10,000th of a second. That's what it is. And with all this, with digital or safety, security from a cybersecurity perspective. That's what we have now achieved. Some of the other aspects is, as I told you earlier, since we are a banker to the government, there are many things that have been given. I'm not going to spend much time because I know many of your central bankers don't do this function. But in case you want to do it, we could discuss in detail about it. But that's another facility or a function that is available. This is something which all central bankers do, full-fledged central bankers, where we function as bankers to commercial banks. We may have multiple commercial banks. In India, as I said earlier, we only have a small number of around 500 commercial banks. These are commercial banks which are big banks. In addition, we have got around 100,000 small banks called unitary banks or regional banks. So all these banks need to maintain accounts with the Reserve Bank of India. Therefore, you can imagine the amount of transactions that keep crisscrossing between the banks and the RBI. Not only with the RBI transactions, but also with the payment transactions. Not only with the payment transactions, but also with their own banking operations, trying to find out how much balance they have. Do they need to actually provide in funding? Do they need to take liquidity support? If they need to take liquidity support, is it collateralized or free? If it is collateralized, what type of security do they need to give it? If there is a security, is there a haircutting or a margin? I just gave you all this in a breath just to show the complications that are there in the core banking system. But as a user, if you're sitting in front of the eCubear terminal, you just need to hit one button. It will tell you what you have to do. But then thanks to that is the people behind who have actually done testing, retesting, as I told to you earlier. These are some of the services which are given to banks. Again, these are similar to most services which even commercial banks give with their core banking systems. So nothing much to call out here. So we can move over to the next slide, where we talk about, again, this slide I'm just skipping because this is only for the central banks which do government services. The next slide actually talks about technology. I made a little mention about it, that it should be browser-based. The reason I'm saying browser-based is because we are not dependent on technological changes. Obsolescence in information technology is very fast. So if it is a browser-based system, depending on technological advancements, we get later versions of the system. So we don't need to worry about obsolescence. That's one. Second, we try to have systems which will have inbuilt validation. And that's why you will find the third last bullet point, which is a maker-checker global implementation. What it means is that if I, as Ganesh, is the person who has initiated a transaction, on my own, I cannot conclude the transaction unless, say, Selva, who is my checker, says, yes, the transaction is right. So this reduces mistakes, prevents frauds, and more importantly, keeps a good audit trail or a balance, which is required by our auditors. In case both these are not required, like certain type of transactions above certain value, there is another additional checkpoint, which is called an authorizer. So in addition to a checker, we could also have an authorizer. And on all this, we have got what is called PKI, which is public key infrastructure, which means that anybody who has access to this data while it is in transit will be only able to see it as garbage. This entire data is encrypted. It is encrypted using this technology, which is called public key infrastructure. Just to give a small example, every byte of data is actually encrypted using a key which is 2048 bits long, which means that if there is an IT system to hack into our data, it will require around 240 years to break it. So you can imagine how safe our systems are, and that results in user satisfaction. We will now move over to the next and the most important thing is payment systems. Now, as I said earlier, in India, cash was the largest mode. Checks were also there. So on payment system, digital payment systems have come in. These digital payment systems have changed the entire world. What is it that has happened is that, as I said earlier, we need to have a system which will take care of settlements being processed on real time or near real time. These are the various facilities which are available here. We can move over to the next slide, which all talks about the RTGS. Most of you have similar systems, so I don't want to tell much about it. It also talks about the retail payment and settlement systems. I've already spoken about this to you. So with this, this is what is the capability of the system. This is what we have now brought into place, continuous change. I can also tell you between 2012 and now, we have had two major upgrades without a disruption. So that's another thing which you have to look at it. Systems do not remain as they are. So as a rough ballpark mark, once every 6 years, we keep upgrading our system. So that's what it is. The next slide is more or less the future. Don't worry much about it. This is what the RBI said it. Soumya, we could just flip through the next four slides. One more, please. So this is what we are going to do, as I told you. Everything is whatever is written there. What you need to look at it are only the last two bullet points. On the fly changes. If the governor asks for a change, you should be able to make it on the fly. So a vendor who's able to do that is a preferred vendor against another vendor who says, I will need 24 hours or 48 hours to make the change. Safety, security, I've already spoken about it. We could go to the next slide, Soumya. And this is what is the future. Modular, platform-based, quick changes, and at the end of it, give customer delight. So this is, in a nutshell, whatever I wanted to say. Soumya, you could just go to the next slide and the slide after that, which says, so what is the future? Safe and secure IT-based system. And the last one is, where is this future? Yes, Soumya, next slide. It's all in your hands. So over to Selva. Thank you very much for the patience.
Thank you, Mr. Ganesh, I think, for the passionate speech. I'm sure you can go much deeper with your kind of experience managing large scale transformation. With that note, let's move on quickly. Uh, so, based on what Mr. Ganesh shared so far, I think these are four important areas which are being seriously looked at by central banks across the world, perhaps for that matter, for most of the central banks in African continent. These are safety and security, particularly cyber security is a worrying area today as more and more cyber attacks are happening. Central banks need to look at the overall infrastructure and see how we can secure them in full. The second one is efficiency in terms of implementing the policies faster without much change required in the system. And that's the important requirement of today in terms of keeping pace with the global changes. The third one is data-based decisions. The more structured data that we have, the more the MIS that we can produce on the fly for meaningful decisions and for fast tracking the decisions. The fourth area is scalability and resiliency and reliability. In fact, as we are moving towards addressing the financial inclusion largely in African continent, or it could be payment ecosystem transformation happening across the region. We need to ensure the systems are scalable and reliable. With that note, moving on to the next slide, what we bring to the table is a solution that has transformed many central banks, including RBI, or even many central banks in African region, Middle East, and Asia Pacific, as well as Europe. We largely address these five areas, five roles of central banks, like banker to government, banker to banks, in this case commercial banks, NBFCs, payment banks, and so on forth. Currency manager, right from the time you do the intent preparation to placing the order all the way up to destruction. Treasurer, in this case we are talking about managing the reserve portfolio of the bank. Here we are talking about as supporting Reserve Bank of India managing over $0.6 trillion reserve portfolio cutting across various asset classes. And the last but not the least is about government debt management. In this case it could be public debt management, securities or bills management, or even it could be related to foreign borrowing management, or even other types of loans. With that note, moving on to the next slide, as quantum today, the quantum is designed using what we call it as emac.ai, event-driven microservices, API first, cloud agnostic, headless architecture enabled by AI. In fact, this is what exactly we have now upgraded in Reserve Bank of India as the latest version running in Tanzu Private Cloud, perhaps one of the largest cloud infrastructure in the world today, with 13 flexible products which can be progressively transformed or can be implemented together as we do it in many central banks in Africa, with 22 packaged business capabilities, 72 microservices, and over 950 user journeys addressing perhaps entire central bank requirement, excluding supervision and reg reporting. That is the kind of depth we bring to the table as intellect. Now, these are like 13 pillars I'm talking about. On the top left, we have the comprehensive banking services to address the standard requirements of current accounts, savings accounts, staff accounts, or even banking services portal with over 300 services, addressing whole range of transactions dealt by central banks for various financial institutions. The second pillar is about comprehensive government services, including the treasury single account at a national level, with a provision to drill down by ministries, regions, departments, all the way up to the real account, to tax collection at a national level, tax distribution, comprehensive payment and receivable services to the government, foreign borrowing management, and whole range of other services. The third pillar is about enterprise general ledger. As we speak today, we generate a $0.7 trillion balance sheet, a fully reconciled balance sheet in real time for Reserve Bank of India, and that shows the resiliency of the system. And what it means is that all the transactions in the system is processed and posted all the way up to the general ledger in real time. The fourth pillar is about currency and wallet circulation management. The fifth pillar is advanced collateral management. Sixth pillar is market operations for various types of market operations, be it repo, reverse repo, standing facilities, overnight lending, intraday liquidity, short long term lending, and so on. Seventh pillar is an integrated central securities depository for government bonds and bills. Perhaps we today handle the entire life cycle of bonds and bills for many government entities. And the eighth area is about comprehensive treasury with a fully integrated front mid back office with comprehensive risk management with a provision to support all the asset classes including FX, FIMM, derivatives, and so on forth. The 10th pillar is national gateway for government, and the 11th one is national level aggregation. And we are, in fact, working on CBDC, and we are trying to launch our own CBDC. In fact, we are part of the CBDC POCs for many central banks, and we'll talk about it later. With that note, moving on to the next one. Perhaps we have in the last decade we have transformed many central banks, including many central banks across African continent, and we are today proud to be one of the unique players with over 700 experts with deep domain knowledge in the central banking. With that note, moving on to the next slide. The system is designed using six key principles. First one being a core-less architecture. That means any component can change anytime, with a true microservices architecture with REST APIs, event-driven architecture, and composability at the center of the entire design. That means we have two different tools, one for designing the processes screens, not only by our team, but even the bank's IT team and partner team. The second one is a Gen AI enabling tool with a LLM agnostic framework for a full complete expert agent configuration and management with a complete track trace trial audit logging and so on forth, the with a full-fledged and full-scale capability for integration on the fly. That means using our platform you'll be able to do the configuration of any type of interfaces on the fly and launch it on the fly. Today, we support 24 by 7 by 365 operation for banks like Riksbank in Europe or Reserve Bank of India in India, Asia, and so on forth. That shows the resiliency, scalability, reliability of the entire system. Last but not the least is about the complete world-class security that we bring to the table. Perhaps nobody was able to hack the system in the last decade. With that note, moving on to the next slide. Of course, Mr. Ganesh, being a veteran in Reserve Bank of India, has already talked about his approach to transformation and what RBI transformation is all about. I just wanted to share few metrics. Today we handle over 500 billion government receipts, over 400 billion government payments, over 180 billion taxes. In fact, $0.7 trillion balance sheet is generated in real time, supporting over 40,000 users, 35 government entities, and over 677 million payments are processed in a year. That includes 10 million payments and over 600,000 receipts on a peak day. That is the scale that we are bringing to the table with a support for 800 user journeys. Perhaps we don't need to get overwhelmed with this kind of a number. The same system is also supporting banks like Seychelles or Lesotho or or other central banks or Papua New Guinea of the world. With that note, let's open up the session for Q&A. I think there is already a question. Let me check my chat. Yeah, there is a question around what were some of the common challenges you have seen central banks face while doing the transformation. Mr. Ganesh, you want to pick it up?
Okay, thanks, Selva. I would actually, I'll make it very short. There are three buckets into which the challenges that central banks face. The first challenge is getting the right type of system which matches the requirements of the central bank concerned, for which we need to actually find out what our requirements are, which is a big task from our side, communicate the requirements properly, and get a vendor who will be able to give it. It's a big activity, and a right vendor who understands this best makes our job easy. So first one is on that bucket. The second bucket is on data. All of us have got IT systems which are actually processing data. When we are moving to a core banking or a centralized system which is consolidating all this, data migration becomes a big challenge. We need to migrate data in real time. It's like performing an open heart surgery, the first of which was done incidentally in Africa many years ago. So we need to do that and ensure that all the old data goes intact, where there are gaps that are filled in, where there is extra data that is filled in. So a whole lot of things relating to the data. And the third biggest challenge is relating to the business process reengineering. What are the changes that we want to do? Many of us actually do activities or functions or tasks which need not be necessary. This is the best opportunity for you to cut down unnecessary flab and make our processing smarter. So these are at the broad level three major challenges that we face. If you're thinking that is vendor management a big challenge, well, I wouldn't say so. If you get a good vendor as a partner, that's not a big challenge. I'll stop here.
Absolutely. There is an interesting question. What have been your learnings while partnering with central banks in Africa? Probably let me pick it up. In fact, but while we have talked about world-class solutions so far, of course, the successful transformation is about a successful partnership. It's about marriage. That means both parties have to have some give and takes. Like otherwise, it's not going to be a successful marriage. Why I'm saying this is because it requires deeper understanding of how do we leverage the best practices from the system and how not to replicate the legacy practices into the new system, right? And that means you may have something, yeah, a certain way of working in manual, semi-manual, manual, or full or part automated way. Here is the system which is fully automated, everything is happening in real time, and so on forth. And therefore a little bit of a give and take, or open mind to look at differently, adopt quickly, will be a great success factor. Particularly that's what we are seeing in African continent. In some implementations are a little bit taking little longer than expected because the users are trying to kind of adopt the way, or I would say continue the way they are already functioning. But that's not the expectation. That means unless we change the way we work, we will never be able to transform. And that's a kind request. If you are deeply looking at transformation, have an open mind. But otherwise, we are seeing quite a success. In fact, we are going live in three different central banks in the next couple of months, another two central banks in next quarter, and we are also in early stage conversation with number of other central banks, and that shows there is a receptivity to transformation. In fact, there a lot of central banks are looking at transformation seriously. There is another question: what modules of QCBS are implemented and in production in RBI? Pretty much all the modules. except in fact CBDC we are doing a POC, and the national level credit aggregation as well as FX. These are roadmap, and particularly these are implemented for some African central banks, and these are not required in India. And except that, everything else is already in production. Perhaps we have also upgraded those modules to cutting edge architecture, cloud architecture now recently, in about 18 to 20 months time. Okay. In eCubear, in-house developed or solution provided by Intellect? Everything is provided by Intellect. The entire eCubear is provided by Intellect. Uh, what were the key reasons for RBI's decision to migrate to cloud? Maybe Mr. Ganesh, you want to little bit touch upon this area? Interesting question.
Actually, very valid point about cloud. Uh, I'll take 1 minute in this. RBI, like most of the central banks and any other commercial banks as well, was very skeptical about cloud 10 years ago because they were not very sure about the confidentiality, safety, and security of the data that was being hosted on the cloud. Today, cloud services have become much more mature. We've got virtual private clouds. We have got clouds which because of the biggest challenge about geography, where typically the servers hosting these clouds are not in outside the geographical jurisdiction of a particular country because there could be legal challenges. So once these were all over, this was the biggest concern, whether the data sovereignty will be remaining within India or not. Second is the safety. Third is the security. When these things were taken care of, the next item, which was a challenge, was to see about cost. Is cloud costly or is cloud more efficient? Fortunately for us, cloud became more efficient. Fourth, what are the major type of players in this? Are they small time players or good established companies? So you've got reputed companies which are working there. And the fifth, what are the prior experiences in this area? Unfortunately, in this, we didn't have much prior experiences because the Reserve Bank was the first one which was doing it, and the other banks were looking up to Reserve Bank to actually give them guidance. So we started off with pilot projects, started off initially with non-critical, non-confidential data, like, for example, public information which the Reserve Bank actually makes available for everybody. Then systems which are not very critical, like email and other housekeeping type of information. Then systems which are critical but will not have great impact. These are systems like banks reporting to RBI, typically reporting and return type of information. And last is the entire core banking. So these were the considerations. And most important, cutting across all this is, are they all efficient, meaning more efficient or less efficient? Since the answer at all places was more efficient, it is going on. But having said that, it is a continuous evaluation. Even now, as Reserve Bank, they are evaluating to continue to see whether this is good to continue or whether we need to re-strategize. It's a continuing activity.
Thank you,
Yes.
Mr. Ganesh. In fact, I would like to add here, while we have tweaked the system to EMAC alignment and we have deployed it in cloud, particularly for those central banks who are in the journey to get into the cloud. In fact, Intellect, Quantum can be deployed in conventional VMware architecture on WebLogic, JBoss, or WebSphere, whatever is the conventional model. We'll be happy to bundle and deploy it as well, just to let you know. Also, I think it's a high time. Of course, we have over 25 central bankers in the, almost over 100 people from 25 central banks are in the call today, by listening to our conversation. My kind request is, world is changing, and world is going to be much more demanding than today in the past. And why not you seriously look at the way you operate, and the way the systems have to be transformed over a period of time progressively, or in a manner which is really going to be successful. And we are here to help you out. At any point in time, Mr. Ganesh can be reached out. I know there's a lot of questions here, a few more, but in the interest of time, respecting your time, I would rather request the team to note down these questions, and we will individually respond to you. Please rest assured about it. With that note, many thanks to every one of you for spending your quality time listening to us. Have a great day. Thank you very much.